Canada's tax changes in 2025. What do you need to know? How much are your taxes going up? What taxes are going up? And how did Trudeau's resignation affect some of these changes? Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell. Joining me as always, Christina Wyatt. And today we are diving in to all the tax changes affecting Canadians, individuals, real estate investors, and business owners in 2025. And what are the ripple effects of the Trudeau resignation or fake resignation, whatever it is now. How you doing today, Christina?
I'm doing great. I'm excited to dive. These are questions weighing on people's minds, right? There's some big tax consequences that are in limbo right now, we would call it, for individuals, businesses, investors, everybody, right? So I'm excited to break down these changes, talk through the delays that have been caused by this political drama that we have going on, is what I'm going to call it, and what that means for our listeners, right? So before we jump in, though, I do want to remind everybody, if you're listening on your favorite podcast platform, please make sure that you subscribe and leave that 5-star review for us. And if you're listening or watching on YouTube, please like, subscribe, and hit that bell button so you always know when new content's coming out. And don't forget to follow us on social media at Control and Compound. We're always keeping up with the latest news and putting out new reels and things that you're not going to want to miss.
All right, Christina, let's get into the big one first. The proposed capital gains changes. What's going on?
Yeah, this is a big one. I think a lot of people, I've gotten this question a few times, like what is happening with those capital gains changes that were announced in April 2024? So back when the budget was announced, they said that these changes were coming. A lot of people were under the impression, and I think they're still under the impression now, that they have passed. We had, I think in the last year, the corporate restructuring that's been completed, the quick sales that were completed because of this capital gains change. Lots of things happen, but a lot of people are saying, and where are we now though, Darren? Like, that's what I want to chat about first, is where do these capital gains changes stand, and what are they if we kind of bring it back a bit?
Sure. So just to recap quickly, the proposed changes, capital gains for individuals, it was always 50% inclusion. For corporations, it was 50% inclusion, which means if you made a $100,000 capital gain, 50% of that will be included in your taxable income. For individuals, they proposed going to 67%, any amount over 250,000 of capital gains. Okay, so 50% for the first 250, and then 66.67 for above that. And then for for corporations, $1, 67% capital gains inclusion. Just devastating for businesses, devastating for a lot of individuals, way more than the small percentage they talked about. Now, the way legislation actually, or these laws get passed, they announce them in the budget. Then there's a two-step process. They go to the Ways and Means. They did that, and then they passed the legislation. Well, they haven't passed the legislation yet. Now Trudeau's stepping down. Parliament suspended. Bottom line, it's going to mean a lot higher taxes for Canadians, but we're going to have to dig into what this all means, and is it actually going to pass?
Yeah, like at this point, like from an official standpoint, it's not actually passed, right? It's just kind of surrounded by political chaos at this point. Like you mentioned, we had Trudeau's government face the allegations of mismanagement in the sustainable development, which led to that Conservative Party filibuster that we saw happen. That delayed the discussions on the capital gains tax. And then if that wasn't enough, we had Finance Minister Freeland step down right before that economic update last month in December. And now we've got Trudeau announcing that he's stepping down, not immediately. He's stepping down once that new leader's been decided. And I saw that dates there were just announced that March 9th is the date that the Liberal Party is going to be picking that new leader. And they're extending Parliament's winter break until March 24th, which obviously is prolonging all of these changes even more. So including a vote for a new election, these capital gains changes. So like the result here, Canadians extremely confused and stalled legislative progress, like we've talked about, right? It's crazy out there.
Yeah, so let's talk about the implications of this capital gains inclusion change, non-change. So they basically said, CRA said, we are going to implement the new rules effective June 2024, even though the legislation isn't passed. Now, that's not unheard of in Canada, but typically these are small little changes that they start administering things differently. Never in the history of Canada has there been such a monumental change where they've implemented immediately and the legislation hasn't passed like this. So the Parliamentary Budget Office said it could be up to $5 billion in additional taxes that CRA are planning to collect this year, that if the Liberal government falls, this legislation won't get passed. It won't happen. CRA will owe $5 billion back to the taxpayers. So think of the implications of this. The Liberal government's going to get an extra $5 billion in revenue this year in additional taxes. That's not really revenue. They're going to have to pay it back. The government's going to have to pay it back the next year if this legislation doesn't pass. Jack Mintz, an economist, said just these capital gain changes could impact Canadians' GDP a negative $90 billion. Corporations, if they're not attractive to investing because they're paying all this additional tax, people don't invest in those corporations in Canada. So it's real uncertainty. Now, the Conservatives come out and said if they're elected, they will not pass this legislation. If the NDP or the Liberals win the next election and form government, we don't know if it's going to pass. I would assume the Liberals would continue on with this, but they haven't commented on it. We do know the Conservatives said they won't pass it. But now you get, taxpayers going, well, do I submit my taxes and pay all this extra? And then, well, if the legislation passes and you don't submit the extra, you're going to have fines and penalties and late fees and all that stuff. So it's a real disaster for Canadians, for Canadian businesses. And think of all the people that sold investments to trigger a capital gain by June 24th when the CRA started administering it that way. So they ended up paying some people millions of dollars to say, oh, I want to pay at the lower rate before it goes up. And then the higher rate may not even pass. It's a huge disaster.
Yeah, it's definitely, it's not good. It's one of those ones that do you plan? How do you plan? It's more questions upon questions. So, but I think it's good that we broke that all down so that people really know where it stands. Because I think there are people out there that think that it has passed. Some people think, it's good that we broke it all down.
Yeah. So talk to your accountants and see what your accountant suggests you do. We're not telling you not to pay it. Some people aren't going to pay it. Some people are. But again, you face that risk. So talk to your accountant. But really, it's the uncertainty. The economy doesn't like uncertainty, and we got so much uncertainty now in Canada. We've got a new president coming in talking about tariffs, and we've got really no leader. We've got Trudeau, I guess, is our leader, but now he's, if he was a weak leader before, now with him announcing he's going to step down, it's a disaster.
Yeah, it's not good. So let's move on. Let's park that one. Move on to some other challenges or Canadians are going to be facing, business owners are going to be facing in 2025, because we said there are other taxes, other financial changes that are going to impact you. So the one that I wanted to bring up today are the Canada Pension Plan requirement increases for employees and employers. And this one is going to impact people, right? There was an increase. So the yearly maximum pensionable earnings, so what you need to pay the CPP up to, increased from $68,500 last year to $71,300 this year. So that's a big increase just on its own. But as well, back in 2024, they added an enhanced yearly maximum pensionable earnings. And the enhanced actually brings that 71,300 all the way up to 85,000. So what's happening now is that employees and employers are paying that basic rate of 5.95% on earnings up to 71,300. And now they're paying an enhanced rate of 4% on earnings between 71,300 and 84,900. So between that 71 and 85 grand. That's a big jump. And if you think of it from a self-employed individual's perspective, that's an 8% 8% additional that they're paying on it. So if we go back in time between 2016 and 2025, this has been a 71% increase for workers earning 85,000, between the higher contribution rates that we have to pay, the higher thresholds that we're paying, the new contribution tier that they've added for the earnings. So, like, what does that look like for Canadians, for business owners? Well, it's definitely lower disposable income, right? Like, that income's going to CPP now. We're going to have reduced business investments because this business owner, they're going to have this as an expense on the expense sheet. So, like, it's a very tough environment for growth right now for Canadians and business owners alike.
Yeah. So, I mean, for the individuals getting their first paycheck here in January, they're going to look at this and go, why am I getting paid less? Well, your net pay is going to be less because your Canada pension contribution is going to be higher. Just to put it in perspective on the numbers, in 2015, it was around 2,400 and change, 2,479. In 2025, it's going to be 4,430. So that's about a $2,000 increase that each employee will have to pay, assuming an income of 85 grand or above. But yeah, to your point, Christina, the employer has to match that. So now you're self-employed and you're doing all these things. You're investing in your business. You're doing this, and then the government says, no, you have to invest in the Canada Pension Plan for you, and as the employer, double that. And now you're going to put in about $8,800 a year into where we think you should be saving. Well, what if I don't want to save there? Well, we know better than you. We're the government. So you have to save in there. Now, I'm not saying there's not some benefits to this for individuals where they're going to receive extra payments down the road that'll be probably taxed at a very high rate based upon people's higher incomes and the increasing tax rates. But to your point, Christina, it just shows up on an expense for an employer. And if you're running a business and your expenses go up, do you increase your prices or decrease your prices?
Increase your prices. And who's going to see those increased prices?
Which leads to inflation, which leads to all the bad things we're going through now. So, this was sold as a great thing for people, but again, the ramifications of it are employees are going to have less money to spend, which isn't good for the economy, and employers are going to have to increase prices to pay the higher payroll taxes. So,
Yeah.
not
And you're
ideal.
right. People are going to start seeing it now. Like, when it was talked about, wasn't, I imagine not a lot of people clicked, probably the business owners because they were thinking about it. But for the regular Canadian, when they get that first paycheck in January, you're absolutely right. They're going to have that's going to be a hit for them right there from just regular income coming in.
Yep. Now it doesn't stop there, Christina. We've got more tax changes coming in 2025. We've got another carbon tax increase. Now you remember the carbon tax. Trudeau has said that he promised the carbon tax would never go over $50 per ton. I think he must have forgot that promise. Carbon tax now is $80 per ton in 2024. In 2025, it's going to $95 per ton. So that's going to mean an increase at the pumps for everybody buying gas. It's going to mean an increase for farmers. It's going to mean an increase for all shipping, Amazon, you name it. Anyone that uses fossil fuels in Canada, which is everyone every day almost, taxes are going up, and those increased taxes again show up on that expense of a business, and they need to pass that higher expense on in the form of higher prices. So that's a big one. The impact of the CPP is huge. The capital gains tax and investment, and then the stagnation of the economy is really having an impact when we look at how Canada GDP is growing versus the other countries. Now, the government will tell you GDP is growing. It's doing really well, but when you dig into what is the actual GDP per person, it is shrinking. It is actually shrinking each quarter now. Now, the overall GDP is going up because of the mass amount of immigration we had. All those new people coming to Canada were spending money, so the overall amount was going up. But that's not a true measure. A true measure is how much GDP per person, and that is shrinking. So we've got some we've got some problems facing Canada. We get some headwinds. We get those higher capital gains tax that are going to decrease investment. People aren't going to want to invest in Canada as much. And when you compare us to some of the other places where you can invest, like the US, we're seeing dollars flow out of our country into other countries, which breaks my heart. I love Canada. I want the money to stay here. I want people to invest in this country. But it's we're gonna have a tough couple of years, I think.
I agree, Darren. I want to switch gears just a little bit and talk about something more specific for real estate investors. And this one impacts me a bit with the Airbnb side. But another change that we heard about last year that was coming into effect January 2025. And this one's going to impact short-term rentals. So if you're renting out properties on Airbnb or VRBO, this one's for you. So last January 2024, they had said, or as of January 1st, 2024, properties operating in areas without short-term rentals are prohibited. So in areas where short-term rentals are prohibited, if they're not allowed there, or you don't have a proper permit, but they are allowed there, you're going to be deemed non-compliant. So this was a big one. I remember I had to get my permits in and whatnot for my Airbnb to make sure that it was compliant, because what happened here is they're saying if your property is not compliant, the CRA will deny any expense deductions. That is huge. So that's right. Like operational costs, maintenance, you name it, they're all off the table as an expense. And then all rental income will be taxed as gross revenue without any offsets at all. So that's a huge tax liability for any Airbnb or short-term rentals out there. Really hits properties hard that are rented for less than 90 days a year, right? Like they're just not in those spots. And if you don't think that CRA isn't watching, they are. Unfortunately, they're going and they're cross-referencing rental income with platforms like Airbnb. And if you're not reporting it accurately, they are saying that they're going to be doing audits. There's going to be penalties. So what happened last year is they gave us a grace period until December 31st, 2024 to get our properties into compliance, to get them up to speed. But it is now January 1st, or it's January 2025. And unfortunately, so everybody knows, this legislation was passed. So this is not like the capital gains where it was in limbo and we didn't actually pass the bill. This one was passed. So if you are not compliant this year in your Airbnb or VRBO, your short-term rental, you're not going to be able to deduct those expenses. So that's huge right there for anybody that is doing short-term rentals.
Yeah, Christine, I mean, you just put some math on that. So, you're running an Airbnb and your municipality says we don't want it. And a lot of people still ran Airbnbs there. And if you had $100,000 of revenue and $100,000 of expenses, well, you didn't pay any tax on that. You were just breaking even. You were paying your bills, and hopefully your property was appreciating. And then the federal government comes along and goes, oh, by the way, you can't claim that $100,000 of expenses. So you're going to have to pay taxes if you earned $100,000 of income. And it's like, well, I didn't earn 100,000. I had to pay 100,000 in expenses. Yeah, we don't care. So you're going to owe, 50,000 or whatever marginal tax rate you're in. So that's huge. And again, goes back to, you can buy $1 million property, but you can't decide who you rent it out to. The government gets to decide that. So the government knows best. So I shake my head at that one, but unfortunately, as to your point, that one has passed. So if we kind of wrap up here, Christina, what have we learned today? What do we always say? We say tax is your number one wealth destroyer. And these are just the 2025 stuff we're talking about. We haven't talked about the 2024, 23, 22, going back each of the last, 5-10 years. So if you don't get a handle on the tax you're paying as an individual, as a business owner, as a real estate investor, it's going to be really hard to get ahead, not just in the short term, but especially in the long term, because these cumulative increases start to significantly impact your net worth long term. So I would encourage everyone to talk to your accounting professionals, make sure you're doing everything you can to reduce the taxes. And number two, talk to us at Control and Compound. We are the specialists in learning how to take a portion of your assets, put it in a tax-free environment where the growth is tax-free, where you can spend it tax-free, and where you die, there's a big death benefit that pays to your family tax-free. Especially those higher net worth individuals, the business owners, the real estate investors. There's really not a better strategy out there. So hope you enjoyed the podcast. Reach out to us at Control and Compound. We'd love to hear your feedback on this podcast or help you any way we can. All right. That's it. Thanks for watching. Thanks for listening. Have a great day.
Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.